stop scrolling. If you hold even a single ounce of silver, or if you're thinking about buying some, you need to hear this immediately. Legendary precious metals analyst Bill Holter just issued an emergency warning that is sending shockwaves through the financial world. And before you brush this off as just another doom and gloom forecast, you need to understand something critical. Holter's last 3 major macroeconomic calls were 100% accurate. He warned us about the escalating global debt trap. He called the massive inflation surge before the central banks even admitted it was real. And he predicted the exact structural cracks we are currently seeing in the commercial credit markets. But what he just said about silver, it makes all of those previous warnings look like a walk in the park. We are looking down the barrel of a historic, unprecedented liquidity crisis hitting the COMEX as early as March of 2026. Right now, physical delivery demands are exploding. We are talking about 40 million ounces being requested for delivery. In previous years, that number was barely 1 or 2 million ounces. The registered inventory is plummeting toward 90 million ounces. Do the math. We are headed for a mathematical impossibility. If even 25% stands for delivery, the exchange goes bust. In this video, we are going to dive deep into Holter's latest and most terrifying prediction. We will expose the multi-trillion-dollar paper derivative market that has been suppressing silver for 5 decades. We will look at why silver recently touched an all-time high and why the recent margin hikes were a desperate attempt to stop a systemic wipeout. The gold to silver ratio is tightening to levels we have not seen in 15 years, and the Eastern markets are no longer following Western pricing. Hit that subscribe button because the wealth transfer of a lifetime is happening right now. If you're not holding physical metal when the music stops, you will be left with nothing but worthless paper promises. This is the endgame Bill Holter warned us about, and it is happening 3 weeks sooner than anyone expected. To understand why Bill Holter is sounding the alarm so loudly right now, we have to look at the massive systemic disconnect between paper silver and physical silver. For over 5 decades, institutional banks and major financial players have used leveraged futures contracts to manipulate and control the price. They trade paper claims on silver that, in reality, simply do not exist in any vault. According to Holter's latest analysis for March of 2026, the open interest on the exchange now exceeds the available deliverable stock by over 400%. This means for every 1 physical ounce of silver in a registered vault, there are at least 4 separate paper claims fighting for its ownership. This is a game of musical chairs where 3 out of every 4 people are guaranteed to lose. But something fundamental shifted in 2025. Silver prices surged by a staggering 154%, and that momentum has not slowed down in early 2026. The big players in the East, specifically the massive trading hubs in Shanghai and the hungry retail markets in India, have stopped playing the Western paper game. They are no longer settling for cash. They are demanding physical delivery at a rate that is bleeding the West dry. We are witnessing a historic drain. The arbitrage between Shanghai and Western markets is effectively vacuuming silver out of London and New York. As of late March, the registered inventory on the COMEX has plummeted to just 79 million ounces, representing a 30-day drain of 34 million ounces. Bill Holter points out that when the delivery cycle began, over 52 million ounces were already queued for physical delivery on day 2. If you subtract the metal committed to these buyers, the remaining unlocked inventory is estimated to be as low as 30 million ounces. This is the mathematical dead end that Holter has predicted for years. The exchange will face an official failure to deliver. Holter is adamant that if the exchange cannot fulfill its physical obligations, those paper contracts will eventually drop to a value of 0. The pricing authority of Western markets, relying on paper illusions since the 1970s, will completely evaporate overnight. The tail is finally wagging the dog. The physical market is about to dictate the price, revealing the true scarcity of silver. The CME is desperately raising margin requirements to 18% to try and shake out small traders. They want to avoid delivering metal they don't have. An institution recently risked $3 million on a gold call spread, targeting $15,000 per ounce. They know the system is breaking. They are positioning for a world where paper is worthless and metal is king. If you are waiting for a lower entry price, you are gambling against a vault that is nearly empty. The era of physical reality has arrived. But this is not just about silver. This is about the entire global financial system as we know it. Bill Holter makes a terrifying point that most mainstream economists are too afraid to touch. He argues that silver and gold are the foundational anchors of all monetary credibility. When the silver paper market breaks, and as we have seen, the math says it must, it will immediately ignite a secondary fire in the gold market. Because gold is the ultimate anti-dollar asset, a default in the precious metals exchange would be the equivalent of pulling the pin on a global financial grenade. We are currently living in a world drowning in more debt than at any other point in human history. As of March of 2026, the Institute of International Finance has confirmed that global debt has hit a staggering $348 trillion. To put that in perspective, that is more than 3 times the entire gross domestic product of every single country on Earth combined. But the real danger isn't just the debt you can see on a balance sheet. It is the hidden world of derivatives. Bill Holter famously refers to these as weapons of mass financial destruction. The estimated notional value of the global derivative market is now over $2 quadrillion. Yes, you heard that correctly, 2 quadrillion. This entire $2 quadrillion house of cards relies on one thing: confidence. It relies on the absolute belief that counterparty risk is being managed and that credit will continue to flow without interruption. But the cracks are already turning into chasms. Consider the Japanese bond market, which Holter points to as the canary in the coal mine. Japan's debt to gross domestic product ratio is sitting at an unbelievable 300%. Their 30-year bond yields have recently spiked to historic highs, signaling that the global carry trade is finally imploding. Closer to home, the situation is equally dire. The United States is now forced to pay over $1.5 trillion every year. This is just to cover the interest on its sovereign debt. This is not paying down the principal, it is just keeping the lights on. Central banks are officially trapped. They cannot raise rates high enough to kill inflation without bankrupting the government, and they cannot lower rates without sending the currency into a hyperinflationary death spiral. When the world realizes that the foundational physical assets, the actual gold and silver bars, are no longer available at the exchange, that remaining sliver of confidence will vanish in an instant. Holter predicts a great wealth migration. We are talking about trillions of dollars, driven not by greed, but by absolute, raw, visceral fear. This capital will abandon the stock market, the bond market, and even the cryptocurrency markets in a desperate search for a safe haven. The problem is the size of the exit door. The total physical silver market represents a mere 0.2% of the entire global financial system. Imagine what happens when even 2% of that global capital tries to squeeze through that microscopic door all at once. It will be the mother of all margin calls. It will be a vertical move in price that no computer model can track. In this scenario, silver is not just a commodity, it is the fuse that ignites a systemic reset. Holter's last 3 predictions were accurate because he followed the debt, and right now, the debt is telling us that the system has reached its mathematical limit. If you are not positioned before the credit freeze begins, you will be locked out of the greatest revaluation of assets in the history of the world. So, what does all of this mean for the true, unmanipulated price of silver? To find the answer, we have to look past the volatile screen price and focus on the fundamental physics of the market. Bill Holter points out that if you look at the historical gold to silver mining ratio, it sits roughly around 8 or 9 to 1. For centuries, the monetary ratio used by empires and nations was 16 to 1. Today, because of paper manipulation and derivative suppression, the ratio has been as wide as 80 or even 100 to 1. As of March 2026, that ratio is finally beginning a violent correction, recently falling below 50 to 1. But the story goes deeper than just money. Unlike gold, silver is an essential industrial commodity. It is the most electrically conductive metal on the periodic table. It is the backbone of the green energy revolution. Solar manufacturing alone is projected to consume a massive 160 million ounces of silver in 2026. When you add the demand from electric vehicles, requiring 50 grams per vehicle, you realize we are in a structural supply deficit. The Silver Institute projects a shortfall of nearly 67 million ounces for this calendar year alone. And remember, silver is mostly mined as a byproduct of copper, lead, and zinc. Miners cannot simply increase silver production just because the price is high. This supply inelasticity is a ticking time bomb. When the COMEX failure to deliver hits the news, Bill Holter believes current forecasts will be proven to be comically underestimated. We are no longer just talking about $50 or even $100 an ounce, levels we have already tested. If silver is revalued to account for the $2 quadrillion derivative bubble, Holter suggests a massive revaluation. While some target $300, others look towards $600 or even over $1,000 as the system resets. But there's a catch. You have to act before the panic starts. Bill Holter warns we are entering the era of unobtanium. When the exchange defaults, silver will not just be expensive, it will be unavailable. Dealers will have empty shelves. The window to secure physical wealth is closing faster than the market can react. If you don't hold it in your hand, you simply do not own it. The countdown to the end of March of 2026 has officially begun. Bill Holter has given us the blueprint. He has warned us of the mathematical certainty behind this collapse, and the inventory levels and delivery demands are confirming his every word. This is the moment where theory meets reality. We are looking at a system where paper claims have outnumbered physical reality by 4 to 1. The spring is coiled, and the release will be violent. But as we reach the end of this deep dive, how are you actually positioned? Bill Holter is very clear on one final point. Not all silver exposure is created equal. In a world where the COMEX faces a failure to deliver, holding paper silver through an ETF like the SLV could be a catastrophic mistake. If the exchange defaults, those paper shares may settle in devaluing fiat currency, rather than the metal you think you own. This is why Holter emphasizes physical possession above all else. If you do choose to hold mining stocks for their massive upside leverage, Holter suggests a critical step: direct registration. By moving your shares out of the street name of your brokerage and into your own name, you ensure you are a legal owner of record. We are talking about a total systemic reset, and in that environment, counterparty risk is your greatest enemy. The window to prepare is not just closing, it is slamming shut. By the time the mainstream media reports on a silver shortage, the price will already be in the hundreds and the physical supply will be long gone. You can trust the paper promises of a bankrupt global financial system, or you can take a stand and hold real physical wealth outside of the digital matrix. The era of paper manipulation is dying, and the era of hard assets is being reborn. Protect your capital, stay vigilant, and keep stacking. Do not forget to like this video, subscribe to the channel, and hit the notification bell so you never miss an urgent market update.